Hello, I'm Michelle McCory. You're watching Kitco News coming to you from New York, and I'm thrilled to be joined by Peter Schiff, founder and chief market strategist of Euro Pacific Asset Management, best-selling author and renowned gold bug. Now, Peter, I've had the pleasure of interviewing you and getting your insights for years during my time at Bloomberg, CGTN, and I-24, and you were spot on several times. So I felt that it was only fitting that I have you join me for my debut on Kitco News. So thank you and happy belated birthday, Peter.
Thanks, Michelle. I'm happy to be here and be your first interview on Kitco.
Yeah, harking back to my years at Bloomberg. Now, during my Bloomberg days, Peter, you were one of the very few that called it correctly ahead of the 2008 financial crisis. You cautioned against subprime mortgages and how the housing market was going to collapse, wreaking havoc across the financial system. And look, I mean, you were ridiculed by some at the time, but we all know how that turned out. And as bad as that was, yeah, you are now forecasting far, far worse. Now, we heard from Fed Chair Jerome Powell, and he's saying that he expects inflation to rise over the year, but that would be, quote, neither particularly large nor persistent. And he's saying long term, and I quote, we think the low inflation dynamics that we've seen for the past 25 years are still intact. Now, Peter, you have long been sounding the alarm over looming inflation. So what do you make of those comments? And when do you think we will see that inflation surge?
Well, first of all, just going back to Bloomberg, I don't know if you know this, but after, being on Bloomberg for years and forecasting the financial crisis, after the financial crisis occurred and I was, proven right, they banned me from their air. So I haven't been on Bloomberg for close to 10 years. So
well, it has been a while. I haven't been on Bloomberg since 2010 myself. So it has been a while. Yeah. I wasn't banned, but I guess we both left around about the same time. But yeah,
right.
Look,
so
you made a lot of correct calls then.
Right. And the Bloomberg audience is not getting the benefit of hearing my calls now because, Bloomberg itself doesn't want to, enable that. But
the Kitco audience is.
Yes, the Kitco audience is going to get much better information. And so I would not put any stock into what any Fed chairman says, because you always have to remember that these guys are there to tell a story and they always want to put a positive spin on everything. And even if they're concerned about something, they'll never admit it. Like when Ben Bernanke was at the Fed telling everybody not to worry about the mortgage market, subprime was contained. He later admitted in an interview after he was no longer Fed chair that he didn't really believe that. He was just simply trying to advance the administration's view that everything was great. And so he couldn't really speak his mind. He kind of had to act as if he was part of the Bush administration, which I thought was a very telling admission that not many people picked up on. But I think Janet Yellen, or now Jerome Powell, rather, at Fed, Yellen's at Treasury. But I think Powell also fancies himself part of that Biden administration. And so he wants to say positive things. He can't say, I think we're going to have really high inflation, because then, what is the Fed going to do about it? Well, you better raise interest rates. You better shrink your money supply. You better stop financing all these stimulus bills. So in order to validate their easy money policy, Powell basically has to say that any increases that we experience in consumer prices are just a temporary aberration. It's transitory, and don't worry about it. But I don't think that's the case at all. I think that what we're seeing now is the beginning of a very, very big acceleration in U.S. Consumer prices. Powell may think it's contained to a transitory event, but it's not. It's as much contained as the subprime crisis was contained. And I think the low inflation that we've enjoyed over the last 20, 25 years, I think a lot of that is through sleight of hand. I think that the CPI has actually gone, has not really reflected the extent to which prices have gone up. So I think we're understating the increase in consumer prices. But I think a lot of the temporary factors that were kind of mitigating the increases, because America was able to run these huge trade deficits we were able to export our dollars to countries like China, and China would warehouse the dollars, recycle them into U.S. treasuries, and then replace them with consumer goods. The Chinese were producing all these low-cost consumer goods for Americans to buy, and the rest of the world was helping out. And so these factors were mitigating consumer prices, plus a lot of the liquidity, the inflation that the Fed was creating. It went into the stock market, it went into the real estate market, into the cryptocurrency market, into the bond market. So I think a lot of these bubbles, as they deflate, the money is ultimately going to go into consumer prices, commodities, and things like that. And so we're about to see a tsunami of inflation. And whether the Fed is oblivious to it or just lying about it, there's no way to know.
Well, speaking of CPI, again, harking back to my past, I recall one of your very colorful analogies that stuck with me. And you said that having the government control the CPI data is like having the mob give a report on crime. So very effective messaging there, certainly gets the point across. So given we can't really trust the government with regards to the accuracy of where inflation is and where consumer prices are really headed, what do you use to make your assessment to figure out what the real rate of inflation is? And you say we're headed for a tsunami of inflation. When? I mean, that is the big question, Peter. When?
Yeah, well, in my mind, I think it's already started. I mean, you could look at some of these price increases, and they're very spectacular. And, they're just starting to work their way through the system. And again, I don't think we're transitioning or it's transitory, unless you're saying we're transitioning from low inflation to high inflation, which is really what's happening. But what you want to look at to understand inflation is you look at the money supply, because it's the money supply that was being inflated. I mean, literally, that's where the word comes from. Inflation is to expand. You inflate, right? When something is inflated, it expands. Prices don't expand. They go up, they go down, but they don't expand. It's money supply that expands. And we have the most expansionary monetary policy in U.S. history. And no other era is even close to what we're doing right now. So this is massive inflation. And so to expect that prices are not going to respond by rising is ridiculous. But then you also have to look at the supply side of the equation, because as the Federal Reserve is dumping all this newly printed money onto the economy, there's actually less stuff for people to buy, because more and more people who used to be engaged in productive activities, whether they were producing goods or providing services, a lot of these people are now sitting at home collecting these government checks. So we're creating more money to buy goods, but we're producing fewer goods to buy. And so how can prices not go way up? I mean, anybody who doesn't think that prices are going to go way up, I mean, just not only don't they understand basic economics, they just don't even have any common sense.
Well, Peter, to your point, a lot of people sitting at home collecting unemployment benefits that pay them a lot better than their actual jobs. And of course, we've also got the highest excess savings in U.S. households that we've ever had. There's about $1.6 trillion in excess savings, U.S. savings at multi-year highs. So what happens when the economy is fully opened and all of that pent-up demand is released? I mean, to your point, more money chasing fewer goods. So is that when you expect the surge, when we have full economic opening?
Yeah, you remember, a lot of this money that people have saved was sent to them by the government. It's not like they earned more money and just didn't spend some of their increased earnings. The government just handed out this money. And yes, a lot of people haven't been able to spend it yet because they haven't got out of the house. And so they have bought a lot of goods. That's why our trade deficits in merchandise are at all-time record highs. So unemployed Americans have been able to shop on Amazon and buy, products made in China, but there's still a lot of other money that they haven't spent yet that was provided to them by the government. And also, we don't know to what extent are Americans not paying their rent, not paying their mortgages because of these moratoriums, and instead they're just holding on to the cash. So who knows, right? Because if you're told by your landlord, we can't evict you if you don't pay your rent, well, why pay it? I mean, I can live here for free. And so people could be accumulating this cash because they're not paying some of their bills. But yes, eventually all of this hoarded cash is going to be spent. And if we're not producing more goods and services for the money to be spent on, then all it could do is bid up the prices on the goods and services that already exist.
So in this scenario, which you've described before, I mean, you're calling for an unprecedented economic disaster following this unprecedented stimulus, both in the US and globally. But what does that look like, Peter? Describe that in all the vivid, ugly details.
I don't know if I could describe it if it hasn't happened yet. I mean, we can look at other countries and how, they've dealt with these problems. But we're in a situation where we have so much debt. And in fact, Janet Yellen was asked a question today. I was watching her in a Q&A.
Right.
And the person questioning her said, hey, when you were Fed chair, you did warn that we had too much debt. And here you are now as Secretary of the Treasury, we have a lot more debt. I think it was 70% of GDP when she said it was a problem, and now it's over 100%. And that's just debt held by the public, not total debt.
Right.
The question was, why aren't you worried anymore about the debt? And, her answer to that question was that, well, interest rates are really low. And the reason it's not a problem is because the rates are so low. And so servicing the debt is not that big a burden given how low rates are. But it's unfortunate that the senator who asked her that question didn't follow up with a better question. What happens when interest rates go up? I mean, isn't it reckless and irresponsible to say we can afford all this debt because temporarily we have these low rates of interest, knowing that the national debt is financed mostly with short-term paper and the government has to constantly roll over these T-bills and, they're going to get the prevailing rate. Well, if you have this huge amount of debt and the only reason there's not a crisis is because interest rates are low, what happens if they're not low? What happens if interest rates are high? And I think that's the box the Federal Reserve is in, because the Federal Reserve knows the only thing between the U.S. government and default or insolvency is artificially low interest rates. So if the Federal Reserve knows if it raises interest rates, it bankrupts the government, how is the Federal Reserve going to fight inflation? Because if this pickup in inflation is not transitory, and obviously the longer the Fed waits to acknowledge it's not transitory, the bigger the inflation problem becomes. And so if inflation is at 5 or 6 or 7% officially by the time the Fed realizes that it wasn't transitory, how does it fight that inflation without bankrupting the U.S. government? The answer is it can't. So my thinking is if it can't fight inflation without bankrupting the U.S. government, it won't fight the inflation, which means it bankrupts the U.S. public because it destroys the value of the dollar.
So, Peter, what does all of this inflation, which, as you say, at some point or another has to kick in, mean for the dollar, and particularly for the dollar's status as the global reserve currency?
Yeah, well, I don't think it's going to mean the end of the dollar. I think it may mean the end of the dollar as we know it, as the world's reserve currency. And so a world in which the dollar is no longer the reserve currency is going to be a world in which the dollar buys a lot less. The purchasing power of the dollar, the exchange rate of the dollar relative to other currencies is going to depreciate substantially, especially when you consider how many dollars the Federal Reserve is going to be printing in order to enable all of this government spending. And remember, the only way the U.S. government can service the debt that it has is if the Federal Reserve provides the money, because they're never going to get it from the taxpayers directly through taxes. They're going to get it indirectly through inflation. So this is massive money printing and monetary debasement. And as the dollar collapses, so too will the American standard of living, because Americans have been living for generations now off of the exorbitant privilege of the US dollar being that world's reserve currency. And that is the reason that we can get away with running these massive trade deficits. We can still consume a lot, but not produce a lot, because the rest of the world is willing to produce for us because they're willing to take the dollars that we print. But of course, it doesn't cost us anything to create dollars out of thin air, nor does it really transfer any real value to our trading partners. Now, right now it does if the dollar is the reserve currency, but if it's not the reserve currency, it's just a piece of paper. And if we don't produce products for them to buy, then there's no reason to hold that paper, and they won't. And so the prices are going to collapse of the dollar. But what that means is that all of the goods that we've been importing are going to be so expensive that very few Americans will be able to afford to buy them. And it also means that a lot of the stuff that we're now producing for domestic consumption, a lot of those products will start being exported to people in other countries who now can outbid Americans for those goods because their currencies are much more valuable. So the whole American standard of living collapses.
All right, that's a very grim picture indeed. But look, to your point, mankind has debased hundreds of currencies through the centuries. I mean, the British pound, the Spanish peseta, even the Portuguese escudo were at one time or another in history as mighty as the dollar is today. So certainly very much within the realms of possibility. But what happens when and if the global economy loses faith in the dollar? What takes over as the global reserve currency, or what becomes the default then?
Well, first of all, before the dollar was the reserve currency, all those other currencies that you mentioned were backed by gold. I mean, they weren't just fiat. I mean, the dollar is the first currency in history to achieve that status as pure fiat currency, right? So there's no real money behind it. And so what I think is going to happen in a world where no central banks currently issue legitimate currency, right? Legitimate currency would be currency backed by gold, real money. That is the situation that the world was in before the dollar. And in fact, when the dollar originally became the world's reserve currency, it was backed by gold. In fact, it was redeemable in gold on demand. I don't think the dollar ever would have gotten that status in the first place, but for the tie to gold. And dollars were basically, or Federal Reserve notes were really IOUs for dollars, and the dollars were gold. That's what the dollar was. It was a weight of gold. And so in today, where nobody is actually issuing any legitimate currency, where every central bank has just got fiat, I think that when the dollar is no longer the main reserve for all those fiat currencies, they're not just going to pick another fiat currency to replace the dollar. It wouldn't make any sense to just go to the euro or to go to the yen, because at the end of the day, they're just paper too. I think the dollar's demise is going to introduce the remonetization of gold. Not that it was ever demonetized by central banks, because central banks all hold gold to some degree. But I think gold is going to replace the dollar as the primary reserve asset for all central banks.
All right. Well, of course, some would argue that that could be replaced by Bitcoin, but we'll get to that a little bit later on. But focusing on, because I know how you feel about that, Peter, but focusing on the dollar and gold. I mean, look, if we do go back to some kind of gold standard, the US is arguably still the best position. The US still has the highest gold reserves, lays claim to nearly as much gold as the next three countries underneath it combined. Granted, we do have China as the largest producer of gold, but it's currently ranked 6th in terms of gold reserves. So if there is this scenario, soaring inflation, de-dollarization, loss of faith in the greenback, which currency is in the best position to benefit from that?
Well, I definitely don't think it's the U.S. dollar, because the U.S. dollar enjoys the benefit of the dollar
even with
being
all those gold
currency.
reserves backing it? Even as being top of the list of gold reserves?
Yes, because first of all, maybe they don't even have as much gold as is claimed. I don't know when the last time there was an independent audit of Fort Knox. So the government can claim they have a certain amount of gold, you know, whether or not you want to believe them. But let's assume that they're being honest. How long will they be able to hold on to that gold? Because we're going to now have to start paying for our imports with gold, right? We have a huge trade deficit. And our trading partners, if we don't have real goods, we're going to have to ship some gold out to pay for our imports. So it's not like the gold supply is going to last very long in the world that we have now. And also the U.S. government, you know, if they're going to run deficits, where are they going to, you know, they're going to have to start spending gold. I mean, right now, all they have to do is print money. So if the government wants something, they just need to print money and they can get it. But in the new world, where gold is the reserve, if they want something, they need the gold to pay for it, right? They either have to tax the citizens and get, their gold, which is, backing their currency, or they're going to have to, start dipping into their reserves. So the U.S. gold reserve can be depleted very quickly if we need that gold to pay for things. See, right now, we don't need anything to pay for anything. America is the biggest beneficiary of this dollar standard, because let's say you take a small country, let's say you take New Zealand, right? If New Zealand wants to import, it has to export. It can't just print. The New Zealand dollar isn't the reserve currency, so it has to earn dollars in order to buy things that are dollar denominated. We don't have to earn anything. We just print them. But if we have to start earning just like everybody else, the other countries, it's not going to make a difference to New Zealand whether they have to earn dollars or earn gold. They still have to earn that reserve. It only makes a difference to the United States because now we go from printing something to earning something, and it's a lot harder to earn than to print.
All right, well, Peter, if the dollar does indeed suffer some form of a collapse, to your point, then it stands to reason that emerging markets that owe dollar-denominated debt and that have rich commodities would benefit. So do you agree with that? Do you think that emerging markets would be best positioned to benefit from a de-dollarization?
Well, absolutely. I think those markets have the most to gain by the collapse of the dollar. And I think that they have shared a disproportionate burden in supporting the dollar. Because, if Americans are living beyond their means, which they clearly are by virtue of the reserve currency and these massive deficits. So if American citizens are living beyond their means, that means citizens in other countries, by definition, must be living beneath their means to make this possible. And I think it's the emerging market consumers that are bearing the brunt of that subsidy. And so when the dollar collapses and Americans are no longer living above their means, which means Americans aren't consuming nearly as much stuff, then who's going to get to consume the stuff that Americans are now too poor to buy? I think a lot of those new consumers are going to be found in the emerging markets. So, so it's like a giant weight is lifted from their shoulders, and now they're in much better shape.
All right. So how do you play that? You're saying it's not an if, it's a when the dollar collapses, emerging markets are going to benefit. So how do you position yourself as an investor to benefit from that? Which countries, which sectors within those countries are appealing to you?
Yeah, well, we own emerging market stocks. We manage an emerging market fund, so people can invest with me through my emerging market fund or directly where we manage portfolios and we have individual exposures. But yes, you're also correct. We have exposure to resources, those sectors in particular. Some of those companies that we own are in emerging markets, but a lot of them are in developed markets, but their customers are in emerging markets.
Can you name any of those for us? Can you get into the specifics here? Which markets and which particular sectors?
People can go to, Morningstar and take a look at our funds and look at the holdings and kind of see a list of some of the stocks that we own in the emerging markets or the other funds. But obviously, I try to look for countries that are in general less fiscally irresponsible than the US. So I like countries where the taxes are lower, but the government spending is lower. And the budgets are balanced, where you have a trade surplus, not a deficit, a current account surplus. I like to see fewer regulations and more economic freedom in the countries I invest. I mean, the freer people are, the more productive they're going to be.
Which countries would those be? I'm going to push you on this one, Peter. Which countries?
Well, you can guess the countries. I mentioned New Zealand, as one of them, but Hong Kong, Singapore, Switzerland. I mean, there are other countries where, there's actually a lot of countries at this point that are freer than the United States. But you can look at the index of economic freedom and see some of those other jurisdictions.
All right. You're dodging the which emerging markets and particularly which sectors question, but I'm going to let it go because it's our first reunion in a while. I do want to get your thoughts on what we're hearing from Ray Dalio, founder of Bridgewater. He's right there with you, sounding the alarm on inflation, telling people to buy stuff and saying that cash is trash. He's also very concerned about what he calls shocking tax policies, saying that, look, policymakers aren't just going to like these capital movements out of debt assets and into other storeholds of wealth. So they could very well impose prohibitions against capital movements to other assets like gold and Bitcoin, and that we could be in for some very shocking tax changes. Do you expect that? Do you see tax changes to gold?
Well, look, when governments are desperate, they do desperate things. And at this point, I don't think there's any reason for them to panic. But in the future, if Dalio and I are correct, let's say, about what's going to happen to the dollar, as more and more Americans become cognizant of the risk of inflation, they will take action to protect themselves, right? And ways that they do that are by buying gold or by buying foreign assets, getting into foreign currencies. Some people may do that by buying Bitcoin. I think that's a mistake, but some people may do that. And so if you look at inflation as a tax, which is really what it is, right? Because the government, they can either take your money officially as a tax, right? Or they can just print money, but then they're taxing you by inflation, because what they're doing is they're reducing the value of your paper assets and they're transferring that value to whoever is the recipient of those spendings. Now, if you want to avoid the inflation tax, that's what you do. You don't hold US dollars. You get rid of them as fast as you can to try to avoid the tax, because the tax is on dollars or dollar denominated assets. So if somebody has a bunch of savings in bonds and they sell the bonds and they put that money in gold bullion, they're exempt from the inflation tax on that money, right? And so if the government says, hey, wait a minute, we have to close these tax breaks, we have to try to prevent Americans from avoiding the inflation tax by getting out of dollars, the way they would do that is either they outright ban the purchase of these inflation hedges, or they tax the purchase in such a way as to make the transactions prohibitively expensive. So they put in foreign exchange controls, right? Where they can, or gold, they find ways. And you can look at other countries when capital starts to flee because there's a lot of inflation or high taxes, governments try to plug up the holes, the escape valves, so they can keep their victims stuck and they can keep on, victimizing them with taxation or inflation or whatever it is. So it certainly is possible that in the near future, if things really start to get bad and more people perceive the threat, that the government will try to do something to prevent them from getting that shelter. But right now, not that many people understand this threat. I mean, they're just oblivious. They're very complacent. They believe the Fed, just like they believed them in the past, and they still haven't figured it out. So right now, only a small number of people are buying gold and buying real assets and getting out of dollars. So right now, there's no taxes, which is another reason to do it now, because they can't impose the taxes retroactively. So, that would be illegal. So if you already have your money out of the dollar and then they impose those taxes on getting out of the dollar, well, you're already out. So, so you're not going to have to pay it. So don't wait until they're trying to, put a toll road there. Right now it's a freeway. You could get out. There's no toll. But at some point when a lot of people want out, there's a good chance that there will be a toll.
But then how do you account for the fact that we have gold sort of hovering at the 1730 levels, has dropped below 1800 as we're getting yet another round of stimulus, more and more reasons to back up your argument, but we're not seeing that movement in gold? Is that because, to your point, people still just have all this faith in the Fed?
Absolutely. I mean, that's the point, is that people are looking at all this monetary policy, all this inflation of the money supply. They're seeing all these cost increases. They can say it's because of supply bottlenecks or shortages, but that's always the case. If you print too much money, there's a shortage of everything, because printing money doesn't create products. Creating products is what enables consumption. Printing money doesn't enable anything. It just lets you bid up prices. So you can always blame it on a shortage of goods, but it's a surplus of money that is the problem. But yes, during COVID, there was a reduction too. So we compounded the problem. But the reason that you're not seeing a lot more money going into gold, especially the bigger institutional money, is yes, they do not yet perceive the threat. They think everything is fine. They believe Powell when he says inflation is transitory. So they're not as concerned. They just like they believe Powell or the other Fed chairs, Bernanke or Yellen, when they said, oh, QE is only temporary. Oh, we're going to shrink our balance sheet back down to pre-crisis levels. Oh, we're going to normalize interest rates. These were all lies that the Fed told, yet the markets believe the Fed. And now they're telling more lies, but the markets continue to believe every lie the Fed tells. And they don't look back at their track record and say, hey, these guys haven't really been honest in the past. Now, again, maybe it's not honest. Maybe they're just wrong. Maybe the Fed is just wrong in everything it says. If it's just wrong all the time, well, then why believe them now if their track record is they've always gotten it wrong? Why would they believe that now they're suddenly going to get it right? But I do think that at some point, and I don't know when that point is going to come, but I don't think we're that far off, more and more people are going to start to doubt the Fed. The Fed is going to start losing a lot of its credibility, especially as inflation continues to pick up and the Fed continues to dismiss, any concerns by holding steadfast to this idea that there's nothing to worry about, that it's transitory. So at some point, people are going to call the Fed's bluff. Like, okay, you can't do anything about all this inflation. And then gold's going to take off, right? So the opportunity now is that while most people don't perceive the threat and are just acting as if everything is fine and investing as if inflation isn't a concern, that's why gold is a bargain, and silver too, for that matter, for all the people that do understand where this is headed and can think ahead of the curve, right? So people who are watching Kitco, right, we can all load up on gold and silver and these type of stocks, but the people who just watch Bloomberg and they don't hear these type of discussions, they have no idea. So by the time Bloomberg's audience starts buying gold, the price is going to be much, much higher. And maybe there'll even be a toll.
Wow. Well, speaking of tolls, taxes, and the like, and former Fed chairs and current Treasury Secretary, well, Yellen has been hinting quite aggressively, actually, that she expects changes in tax policies. She's also hinting that there'll be some, quote, revenue raises. I want to play this for you and get your reaction. Let's watch.
No, the stimulus package, the American Rescue Plan, was not funded with any increases in taxes, but a longer-term plan that addresses critical needs of this economy probably would be accompanied by some revenue raisers. We expect to examine changes to tax policy along with programs that will address some of the long-standing problems that have held down productivity and labor supply in the United States. Will address infrastructure, risks from climate change, education, training.
So, Peter, we have revenue raises, changes to tax policy. Seems to me like she's hinting that that big, giant infrastructure bill will mostly be paid for by taxes. What's your take on what she said? And we have inflation, which, as you say, is a form of tax, potential inflation, combined with these taxes. What happens then?
Well, I mean, first of all, the majority of the funding, Janet Yellen said that we didn't raise taxes to pay for all the stimulus. That's true. They didn't raise official taxes. They paid for the stimulus through inflation. And inflation is a tax, and it's going to fall hardest on the lower income and middle income people. So it is going to be very expensive. We're not getting all this stimulus for free. It's going to cost a lot of money. But yes, what she's saying is this next round is going to be accompanied by some official tax increases, obviously targeted at the rich and corporations, because that's part of what the Democrats were elected to do, is redistribute the wealth and to punish people who are successful. And so they'll do that. Whether or not that's going to raise additional revenue, it's hard to say. Because behaviors change. There's these new taxes, will impact the economy. And so the income that they're hoping to tax may be greatly diminished by the tax increases themselves. So how much they'll actually raise is always hard to say. They never raise as much as they think, and they always spend more than they think. So I think the tax increases will only provide the government with a relatively small portion of what they're going to be spending on these new programs. And so they're going to mainly rely on inflation. They're going to print the money, right? The Fed is going to print the money to buy the bonds that the government issues to fund all these programs. And, the dollar is going to crash and prices are going to soar. And, people need to be prepared.
Well, look, Peter, on the upside, if we do get this infrastructure bill, regardless of how the government pays for it, it would most likely be good news for commodities like silver and copper. So what are your thoughts on that, and how are you playing that?
Yeah, I mean, certainly to the extent the U.S. government is going to spend the money on traditional infrastructure, it's going to require a lot of those resources. And so a lot more spending on those resources is going to push up the prices. Now, I don't think it's necessarily a good thing for the U.S. economy to have the U.S. government squandering a bunch of money, probably overpaying for maybe a lot of infrastructure projects that we don't even need, that aren't even economically viable. It's much better if the private sector finances those costs. But a lot of people always forget that the infrastructure spending itself doesn't help the economy. It's the infrastructure that helps the economy, but only to the extent that it makes the economy more productive in the future. But the current cost of creating the infrastructure, that is a burden on the economy. We have to pay the cost up front in order to reap the benefits in the long run. So you can't make a weak economy strong by spending more money on infrastructure.
But
a weak economy can't afford the infrastructure. You need to be strong first, and then you can spend on infrastructure.
But from a personal investing perspective, seeing all of these macro trends happening and seeing this most likely infrastructure bill coming to fruition, surely that is a good indicator for certain commodities. Is that something that you as a personal investor is looking at? And if so, what's your strategy there?
Yeah, I mean, I own companies that are in those industries. I mean, I have companies, I have exposure to copper, and I have exposure to nickel and energy and all the things that would be required, with more infrastructure, as well as, if we continue to move to electric vehicles, what are the raw materials that are used there in those vehicles or in the batteries or things like that. So, yeah, I mean, we're big investors in resources, and I think that they're going to benefit from money printing worldwide, not just here in the United States, but these infrastructure bills in particular, to the extent that, they're utilizing these resources, it's going to put more upward pressure on the price.
So given the infrastructure bill, the trend towards electric vehicles, decarbonization, you've mentioned that you think silver may outperform gold. What is your silver target for the end of 2021?
Well, I don't really have a target, let alone just for the end of 2021. I mean, I think silver prices are going up. How high they go in any one year, it depends on factors that I can't predict with any surety. But I think prices are going much, much higher. I mean, because especially once the dollar breaks and it really starts to fall precipitously, and people start to perceive correctly the gravity of this situation, and they start seeking out precious metals as stores of value, I mean, the prices are going to go way up.
All right. Well, speaking of silver, seems your son Spencer doesn't quite agree. Apparently, he has sold off the last of his silver stocks to get into Bitcoin, and that he is now 100% invested in Bitcoin. He is hodling, as we say. Now, look, there is agreement between you and your son over concern over this unprecedented stimulus, but clearly disagreement over how exactly to protect against it. What's going on there, Peter? What's happening in the Schiff household with a Bitcoin gold debate at the dinner table?
Well, first of all, I have to remember my son is 18 years old. So he's not, he's never actually had a job, and he's a freshman in college. So he's not like this wizard. You shouldn't go out and follow his investment advice. But, I think it's very funny how many people on the internet, are so happy that he's all in. They're congratulating him for basically having no diversification whatsoever, and for putting 100% of his personal net worth into a highly speculative, volatile digital asset. And they think this is a great decision. Like, they think I should follow his advice. I should learn from my 18-year-old son, despite the fact that he is obviously making a lot of mistakes. In fact, people should know better. I mean, even the people who believe in Bitcoin, right?
Right.
Would not say that you should have everything you have in it. I mean, what if it doesn't work out? I mean, what if so? I mean, so he's just thrown caution to the wind, and I don't think that's something that people should want to emulate and say, yeah, that's the greatest investment strategy, to put all your eggs in the same basket and then hope it doesn't break, right, or whatever. So it's interesting that so many people condone his concentration.
Well, certainly an age-old investment theory to diversify. I can't imagine people are going to be too critical of you advising for diversification. but how come your son isn't getting the same strong sense to go into gold, go into silver that you have?
Well, he doesn't have my years and my experiences and my wisdom. I think he's younger and he's more susceptible to all of the hype and the mania that surrounds Bitcoin. And he's a real libertarian, anarcho-capitalist. And this is also, part of that whole world. And he's kind of immersed in it now. And it's just kind of something that's, consuming for him. And he's bought into it. He's like, he drank the Kool-Aid. I didn't drink the Kool-Aid. So my son could be absolutely positive that he's right. And, that's typically, you have the younger generation. They think that they're doing everything the first time. Their parents, their grandparents, they're old, they're dinosaurs. They don't get it. But I've been exactly where my son is now. And my son will be where I am now in the future, where he may have a son who's just as cocky as he is. I think he and his generation have reinvented the wheel and they know everything, right? So these are patterns that repeat.
Sure.
And so, look, I'm not saying that there isn't a compelling, sexy story that is, causing people to believe in Bitcoin. I just think it's all wrong. I think at the end of the day, when you peel the onion and you get to what's really there, there's nothing there. And all of the justifications that people want to, hang their hats on to validate their thesis of how Bitcoin is digital gold and it's going to replace gold as a store of value or maybe a medium of exchange or both or whatever. I just don't see it. I see when I actually, look the whole thing, to me, it's just nonsense. And yes, I understand that if enough people don't think that, there is a theoretical scarcity to the Bitcoin. There's 21 million Bitcoin. There's 2.1 quadrillion Satoshis. But if you want to own a full Bitcoin, there's only 21 million of them there. Now, that could be a big number if nobody wants them. But if a lot of people want them, then maybe the number's not so big. But as long as people want to buy them and the people who own them don't want to sell them because they're convinced they're going to the moon, the price could go up. But that's the same dynamic with any pyramid or Ponzi scheme or bubble. But I think at some point, the psychology is going to turn. And a lot of people who said they would never sell their Bitcoin, they're going to want to sell some. And I think the supply of people who want to buy them is going to be exhausted.
Well, there have also been a lot of people who at one point said they would never buy Bitcoin, but have done a complete change on that. And you've been taking a lot of heat for your calls, telling people to get out of Bitcoin when it was around 3,000. Since then, as we know, it broke 60,000, around the high 50s now. One of those people who was once a Bitcoin skeptic, Mark Cuban, and he's had quite a go at you on Twitter. Now, this is the same guy who once said that he preferred bananas to Bitcoin. And Cuban is now saying he sees utility in Bitcoin. And he's made a case that Bitcoin is better than gold, telling you, and I quote, to move on because gold is dead. And here's the tweet. He said, "Let me help Peter. Gold is hyped as much as crypto. Do we really need gold jewelry? Gold can make you a ring. Bitcoin, Ethereum are technologies that can make you a banker, allow friction-free exchange of value, and are extensible into an unlimited range of biz and personal applications." Now, Peter, I know you gave it back to him on Twitter, but we're going to give you a chance to respond here. And by the way, if you and Mark want to hash it out one-on-one, we would be more than happy to host that debate on Kitco News. But why is Mark wrong, in your opinion?
Well, first of all, that's the hallmark of any bubble, any speculative mania, that at some point, some of the people who were thinking rationally and were negative capitulate and join the party. They just can't resist because it's gone up so much that you have this capitulation where some of the naysayers, join the party. Now, most of the people who were negative on Bitcoin are still negative. I mean, you have a small group of high-profile people who have recently become converts. But also, when you look at a lot of these people, they've also recently become attached to crypto-related businesses. So now they've got a vested interest in the success of Bitcoin. And so I would question their objectivity when all of a sudden they're getting paid and they're involved in ventures that directly benefit from people getting into crypto. And now all of a sudden they like crypto. I mean, back a few years ago when they had no interest and no investments in crypto, they thought it was worthless and Bitcoin had less value than a banana. But now all of a sudden where they have some way of monetizing it and making money off of people buying Bitcoin, well, now they think people should buy Bitcoin. So, there's that's going on. But to the extent that some of the people have actually changed their minds and now think something that they used to think was worthless now has value, yes, I mean, I don't doubt that some people have done that. And again, that is typical of any mania, any bubble. People are eventually going to throw in the towel and capitulate after years and years of sitting on the sideline while everybody else is making fun of them. And so to me, a lot of these big people getting involved could just as easily be the sign of a top as the sign of a whole new big leg of the bull market, because what the Bitcoin bulls are saying is these big people getting involved means that even more big people are going to get involved in the future. Well, maybe not. Maybe this is it. Maybe these are all the big people that are coming in and there's nothing to follow them. It doesn't change my mind to see a Cuban or his buddy on Shark Tank, Mr. Wonderful. He's also now, he's touting it. And then of course you've got Elon Musk, who is the biggest,
sure.
In fact, he tweeted up the price of Bitcoin earlier this morning, but it's since turned around. I mean, everybody is waiting for an Elon Musk tweet as a buy signal. There are a lot of people now. Somebody wrote an algorithm that they buy Bitcoin every time I tweet about it. So the whole thing is, even though I just tweet about it in a negative way,
Maybe that's the secret deal you've got going on with your son Spencer there, but who's not going to speculate on that one, Peter. But okay, you mentioned Kevin O'Leary, Mark Cuban. As we said,
yes.
Many previous critics have come around, Jamie Dimon, Anthony Scaramucci. And a lot of them say that, okay, at first they were like, yes, this doesn't really have any intrinsic value beyond this idea of group consensus, which to your point is the reason that it's been going up. But then they say they've come around to the technology behind it, the crypto blockchain technologies, the Ethereum blockchains, the idea that there is going to be a need to move away from the dollar as the global reserve currency. A lot of the same arguments that you put forward towards buying gold, they say apply to Bitcoin. So
and I think they're completely.
Peter, well, I want to just end it on this. Is there anything that could get you to flip? And is there any cryptocurrency that you could get behind?
Okay, well, first of all, you take a guy like Anthony Scaramucci. In the beginning, he was skeptical and wasn't a Bitcoin believer, but now he has a massive Bitcoin fund. And he has basically staked his reputation and really made a career-ending, I think, bet if he's wrong on Bitcoin. I get email solicitations. I guess I'm on his mailing list, and that's the only investment product that they're trying to get me to get involved with is Bitcoin. So when you have a Bitcoin fund and you're a manager of that fund and you're getting, your fees, you all of a sudden are completely one-sided and biased. You got to go out there and talk Bitcoin. You got to say Bitcoin's great. Bitcoin's the new gold. Bitcoin's going to go up. So Anthony Scaramucci has a huge vested interest now in the success of Bitcoin. And so, I mean, what do you expect him to say? But Bitcoin is great because he makes a lot of money if you buy Bitcoin and he's managing that fund. And he needs everybody to buy Bitcoin because otherwise the price will crash and he'll lose money in his fund because Bitcoin is all based on the greater fool coming in and buying more of it. And
I mean,
so,
I get your point about a vested interest, Peter, and it's certainly a strong one. But back to the idea of the blockchain, the technologies, the need for decentralization. To go back to the question, is there anything that could make you flip? And is there any kind of cryptocurrency that you could get behind?
I mean, the only cryptocurrencies that would make sense would be legitimate cryptocurrency. Just like I don't like fiat paper currency, which is paper currency that's not backed by real money. I don't like fiat digital currency. But if you have a digital currency that's backed by gold and redeemable in gold, well, then that's fine. That's great. I think that would work perfectly. The problem is governments don't like that. So if there are credible digital currencies backed by gold, everybody would prefer those currencies to the dollar, to the euro, to the yen. And so if that were to happen and you had a legitimate threat to the monopoly that central banks have, then the governments would act to shut it down. I think the reason they're not trying to shut down Bitcoin is because they don't perceive it to be an actual threat. And I agree. I think Bitcoin is only a threat to the people who are buying it, and they're going to end up losing their money. But it's not a threat to governments and central banks. But a legitimate alternative to fiat paper currency, real digital currency, stable, that can act as a medium of exchange and a unit of account and a store of value, and that solves all of these problems, which is what a real cryptocurrency backed by gold would do, that the government would probably not tolerate.
Well, Peter, a digital currency backed by gold traded on the blockchain platform or something like that. I think you're onto something there. I think you've hit the mark on that one potentially.
But it can't just be fractional. It has to be a one-to-one relationship where the price isn't going to go above the actual intrinsic value of the gold that backs it up.
All right. Well, a lot more to explore. We're going to have to pick that part of our conversation another time. But thank you so much for joining us. Happy belated birthday. I will not be sending you Satoshis for your birthday. Peter Schiff, Chief Market Strategist of Euro Pacific Asset Management. Thank you again so much for joining us. And thank you for watching Kitco News. I'm Michelle McQuarrie.